I'm Matt Bichard with REIT.com. Recently, during REITWise 2014 NAREIT's Law, Accounting, and Finance Conference, I had the opportunity to sit down with Luke Zubrod, Director of Risk and Regulatory Advisory Services with Chatham Financial. Here's our conversation. What are the biggest risks and opportunities you see in the current derivatives marketplace?
I think the biggest opportunity in the current environment is the tremendously low rate environment and the cheap capital environment. And I think probably one of the best examples in the most recent quarter, we had a REIT issue 5 and 10-year notes at less than 2.5% and less than 4%. That's really, and probably would have been unimaginable even a couple of years ago. So I think that presents a real opportunity in terms of establishing a balance sheet that is filled with low-cost, long-term capital. From a risk perspective, I think that conversation really starts with the Fed's extrication from its quantitative easing monetary stimulus. And I might sort of put a new word into the lexicon, quantitative diseasing, or for short, quantitative disease. And I think this gets at the third of 3 chapters of the Fed's unwinding of its stimulus. The first chapter will be stopping its bond purchase program, which is expected to end around the end of this year. The second will be the raising of the benchmark interest rate, which is expected, based on Chairman Yellen's comments, the middle of next year. And the third and probably most perilous aspect of this wind down of the stimulus is the selling back of what will then be an almost $4.5 trillion bond portfolio that the Fed has. And the question will be, certainly selling a portfolio of bonds that large into the market, just like buying it brought long-term rates down, selling it will push long-term rates up. And so the question will be, what are the competing forces and the complementary forces also placing pressure on interest rates, either up or down? You have questions like, what will the fragility of the US economy look like in that time? How about the Eurozone economy or the Chinese economy? Will we be able to get out of that bond portfolio before the end of this expansionary phase of the business cycle? So these are really the sorts of questions that will put a lot of volatility into the interest rate markets, probably upward pressure on rates. And I think kind of bringing all of this together, the opportunities and the risks, I think what it counsels is using this opportunity to kind of remove as much uncertainty from both capital and interest rate decisions or exposures in the future. And I think, looking at the data from REITs have really been working toward this end now for a couple of years. They've been taking advantage of the times we're in. But that's true as a whole. It's not always true of individual parts. And so companies really need to, it's not too late to kind of get their houses in order for a capital and interest rate environment that could look much different in the years to come.